Hello, investors. Welcome to part two of analysis of HDFC Life Insurance Company. We were talking about the strengths of this company, right? And herein we talked about the product innovation, the strong distribution network, the solvency position. Now let's talk about the return on assets, return on embedded value. These numbers, right? These numbers are way better than if you talk about your the life insurance arm of SBI or ICICI Max Life, anyone else. Return on assets, return on embedded value. These numbers are way better in HDFC Life, and that's why it gets better. It trades at better valuations. It trades at premium valuations than those companies. If you see the competitors, they are struggling. They are at a P ratio of about 60, 65, 48. That's how they go. But HDFC Life, it's above 100, right? Again, in terms of profitability, also, it's the most profitable in terms of margins. Uh, new business margins simply means, you see, for an insurance company, the revenue for a policy that is sold this year, the revenue keeps on coming for next many years, right? Because the people, they'll keep on paying insurance premiums every year, year after year, right? New insurance margins simply means that what proportion of your premium, what proportion of your revenues came from policies which were sold this specific year, right? Only this year they started the policies that were sold this year, not from previous years. And for HDFC Life, this number is highest among its peers, which means that it is able to sell way more premium than anyone else. And it's growing way more faster, even in relative terms, not in absolute terms. Even in relative terms, it's growing way faster than other competitors, right? So this number is also higher for HDFC Life. Now let's talk about the weaknesses. Operating margin is decreasing. It's truth, but mm, uh, I'm not very sure about it because the company is consistently improving the new business margins. I'm not very keen on how it does in the old business. As soon as the margins for the new business, they keep on increasing, right? The new age technology. Yes, this is where I see the core problem. You need to have a better product for the millennials. You need to, insurance as a sector, as an industry, the companies in the insurance industry, the products, they are still confusing. People still do not understand the price that they are paying and the value for the price that they are getting. The products are very complicated. If tomorrow innovation happens, a new entrant comes which offers very simple products, which with very simple terms and conditions, it probably might kill this industry. The chances are low, but with technology, disruption is inevitable. It cannot be eliminated, right? Uh, Another major negative that I see is Standard Life is consistently decreasing its share. So, as you would know, HDFC Life uh, is a joint venture between HDFC Limited and uh, your Standard Life Mauritius Holdings. You see, in March 2018, 80% stake was held by promoters, 51% by HDFC Limited, and 29% by Standard Life. Standard Life is consistently bringing down its share. It has moved down its share to 8.9%. In budget, in this month's budget, Nirmala Sitaraman announced that FDI inflows in insurance industries will moved up to 75%. But the opposite is happening with Standard Life. It's pulling out its money. I don't know whether it's not confident or it's having some liquidity concerns. Wants to book profits. I don't know, because the company has given good returns in the past few years. What is the reason that promoter is selling such high in such high volumes? That's a negative thing. Second, again, in short term, DIIs are selling. If you see, DIIs are decreasing their stakes, but this is a temporary thing. DIIs are selling everywhere. They know that the market is overvalued and all the stocks are overvalued. They will see their due correction. COVID claims, right? COVID claims will impact this year's profitability. Uh, lot of life insurance claims were made this financial year because of COVID-19. But it's uh, there is a silver lining to this cloud. The silver lining is a lot of people are now aware of life insurance and the importance of health insurance. Therefore, these companies will see a lot of policy requests in the quarters and years to come, and which means that in the long term, they'll see better profitability. So, not a negative thing in my opinion. As for premium valuations, we already talked about that this company is showing better margins, better numbers than all the competitors in every terms, and that's why it's bound to trade at such high PE ratios as compared to the other players. And this is not the only thing. The other things are this industry itself has a long way to grow, and that's why all the companies in this industry are trading at such high valuations, right? The third reason is, of course, the HDFC housing development financial corporations backing. It's a very strong promoter, and that's why all stocks of HDFC, they trade at higher valuations as compared to their peer, right? So in description, I'll put down all the links, the management discussion and analysis, and all the money control screener and everything, all the links that I use to analyze this company. You can, if you want to dig deeper, you can go through them and understand. In my perspective, if you want to remain invested in invested for decades, this is a very good company. Again, purely for educational purpose, please just don't go and invest in this company. Do your own research, understand and consult your financial advisor, then take a call. But my understanding, I am invested in this stock, disclaimer, and I'll keep sipping the stock. Hope this video was helpful. Do like, share, and subscribe to support my channel. Thanks a lot for watching. See you in the next video. Bye.